Kevin Mahn joins us now to discuss the market and if it can continue higher. He is President and Chief Investment Officer at Hennion Walsh Asset Management. Welcome, Kevin. Nice to have you here.
Good to be here.
Do you agree with Mike Santoli's last point that bull markets tend to slowly grind higher?
Yeah, and I think we're in a position right now where most investors, whereby they were fearing a potential recession about a month ago, now they're fearing missing out on the next upside in the market. And we have a very confident consumer. And consumers, as we know, are a large part of the U.S. economy. So as the consumer spends, the economy does better. And I am forecasting a record holiday shopping season, which could bring a little Santa Claus rally at the end of the year.
But it's when we start convincing ourselves that the market only has one direction to go that I start getting sweaty palms. What about you?
Understandable.
Yeah.
But if I think you look at the underlying drivers of the economy right now, with the consumer at the head front of that being 70% of the economy, we have the lowest unemployment level in 50 years. Wages are rising. And we have a Federal Reserve who has basically told us they're not going to do anything, at least for the next month. That sets the stage for a pretty good stock market rally, although it's going to be kind of limited because of where valuations are right now. That
was going to be my next question.
Yes.
If we do get a little bit of a Santa Claus rally, about what type of a percentage gain do you think is still left in this market?
There, as it stands right now, we think the market can grow by about 10% between now and the end of 2020, with the bulk of that gain likely coming between now and the end of the second quarter of next year. Once we get into the summer months of next year, then all of a sudden we get to the Democratic convention, the Republican convention, and we could see some trendless volatility until we know who the candidates are.
And who do you think takes us higher? I mean, we've been through a couple of cycles already this year where growth has led the way for a time, then the defensive issues led the way for a time. Now we're back to growth again.
We're back to growth again, but investors are still craving income. They're looking for yield because they can't turn to traditional fixed income sources when the 10-year U.S. Treasury is yielding about 1.7%. So they want growth opportunities. They want some dividend income. That points to dividend-paying stocks.
Kevin Mahn, thank you so much for joining us tonight.
It's my pleasure.
And Kevin is with Hennion Walsh Asset Management.